Welcome to Finance Audiobook Summary, the real platform to learn finance in the simplest and most powerful way. If you're passionate about mastering the art of trading and building the right mindset for consistent success, you are in the perfect place. Before we begin, don't forget to like this video, share it with your friends, and comment your thoughts below, because your support inspires us to keep creating powerful financial content just for you. And of course, if you haven't already, make sure to subscribe to our channel Finance Audiobook Summary so you never miss life-changing lessons from the world of money, investing, and trading. Today, we are diving into one of the most influential trading psychology books ever written, Trading in the Zone by Mark Douglas. This book is not just about strategies or technical setups, but about building the mindset of a truly successful trader. In this audiobook summary, I will share with you the 7 most powerful lessons that can completely transform the way you trade. So stay with me till the very end, because every single point has the power to shift your perspective and take your trading journey to the next level. Let's begin. Point 1. The importance of mindset. When it comes to trading, most beginners believe that success depends on finding the perfect strategy, the most accurate indicator, or the latest market secret. But Mark Douglas, in Trading in the Zone, makes one thing very clear. Trading success is 80% psychology and only 20% strategy. Think about it for a moment. Why do two traders, using the same chart, the same setup, and even the same market data, end up with completely different results? The answer is not the system, it is the mindset. Your mindset determines how you react to risk, how you handle losses, and how disciplined you remain when the market tempts you with greed or scares you with fear. A trader with the right psychology can use even a simple strategy and still achieve consistent profits. On the other hand, a trader with the wrong mindset will fail, even with the most advanced system in the world. Douglas explains that the market is neutral. It doesn't care about your hopes, your fears, or your expectations. The only thing that matters is how you interpret the market signals and how you control your own emotions. This is why professional traders don't just work on their charts, they work on their mental framework. They train themselves to accept losses without emotional breakdown, to take profits without greed, and to remain calm in uncertainty. So the first key lesson is this: your mindset is your most powerful tool. Strategies may change, markets may evolve, but if your psychology is strong, you will always have the confidence, discipline, and clarity needed to stay consistent. In short, trading is not about controlling the market, it is about controlling yourself. Point 2. Probability thinking. One of the greatest truths about trading is this: no one can predict the market with absolute certainty. Every trade you take is nothing more than a probability, a chance, not a guarantee. Mark Douglas teaches us that the mindset of a successful trader is built on this single principle: thinking in probabilities. Most new traders make the mistake of believing that if they study hard enough or find the right setup, they will always be right. But this is an illusion. Even the best strategy in the world cannot guarantee success in every single trade. What it can give you is an edge, a higher probability of success over many trades. Douglas compares trading to a casino. In a casino, the house does not win on every spin of the roulette wheel, but they have a statistical edge that ensures, over thousands of spins, they will always come out profitable. Traders must think the same way, not focusing on the outcome of a single trade, but on the results of a large series of trades. When you embrace probability thinking, you stop obsessing over being right or wrong on one trade. Instead, you focus on executing your plan consistently, knowing that over time, the probabilities will work in your favor. This mindset frees you from fear and overconfidence. A losing trade doesn't shake your confidence, because you understand it was just one event in a long series. A winning trade doesn't make you reckless, because you know it doesn't guarantee the next one. The true power of probability thinking is this: it brings emotional stability. It teaches you to detach your self-worth from your trading results and to see the market as a game of probabilities, not certainties. So the second key lesson is clear: stop chasing certainty and start trusting probabilities. That shift alone can transform how you see every trade. Point 3. Risk management. Every trader dreams of winning big, but very few are truly prepared to deal with the reality of risk. Mark Douglas reminds us that the market does not owe you anything, and every trade carries the possibility of loss. The secret to becoming a consistent trader is not in avoiding risk, it is in accepting it fully before you enter the trade. Think of it this way: once you place a trade, the outcome is out of your control. The market will do what it wants, not what you want. If you are emotionally attached, you will panic when the trade goes against you. or you will become greedy when it goes in your favor. But if you have already accepted the risk, if you have already decided how much you are willing to lose, then you are free. Free from fear, free from hesitation, and free from emotional breakdown. Douglas emphasizes that professional traders never risk money they cannot afford to lose. They set stop losses, they size their positions correctly, and they treat every trade as just one small part of a larger series. This discipline protects them from blowing up their accounts and allows them to survive long enough for their edge to play out. Here's the truth: a single trade should never be able to destroy your trading career. That is the essence of risk management. If you risk too much, you will trade with fear. If you risk the right amount, you will trade with confidence. So the third key lesson is simple but powerful. Always define your risk, accept it completely, and then let the trade go. Your job is not to control the market. Your job is to control how much of your capital is exposed to it. Point 4. Discipline and consistency. Every trader enters the market with the dream of making profits. But Mark Douglas reminds us that it is not the occasional big win that makes someone a professional trader. It is discipline and consistency. Think about it. Anyone can win once or twice by luck, but only a disciplined trader can win consistently over the long run. Discipline in trading means following your plan exactly as it is, without letting emotions interfere. It means entering trades when your strategy says so, exiting when your rules tell you, and never chasing the market just because of excitement or fear. Consistency is the result of this discipline. Just like an athlete trains every single day to build muscle memory, a trader must train themselves to repeat good habits again and again, until they become natural. The more consistent your behavior, the more consistent your results will be. Douglas explains that many traders fail because they treat the market like a gamble, changing strategies, chasing signals, or acting out of impulse. But professional traders stick to their tested methods, and they execute with precision, no matter how tempting it feels to break the rules. The truth is, markets are uncertain, but your behavior doesn't have to be. If you can control yourself, if you can build the discipline to act the same way under pressure, you will achieve consistency. And consistency is what builds long-term profitability. So the fourth key lesson is clear. Success in trading is not about one perfect trade, it's about doing the right thing over and over again, until consistency becomes your edge. Point 5. Letting go of fear and greed. In trading, two emotions destroy more accounts than any technical mistake ever could: fear and greed. Fear shows up when a trader hesitates to take a trade, even when their strategy gives a clear signal. Fear of losing, fear of being wrong, fear of repeating past mistakes. This fear paralyzes decision-making, leading to missed opportunities or premature exits. On the other side is greed, the desire to win more and more. Greed pushes traders to over-leverage, to stay longer in trades than they should, or to take unnecessary risks just to chase bigger profits. And very often, greed ends in painful losses. Mark Douglas explains that both fear and greed come from the same root: the inability to accept uncertainty. The truth is that the market will always be uncertain. The only thing a trader can control is their plan, their risk, and their mindset. Professional traders train themselves to detach emotionally. They do not fear losses, because they accept them as part of the game. They do not get carried away by greed, because they know consistency matters more than one big win. The key is balance, trusting your edge, executing your plan, and letting the market do its work without emotional interference. So the fifth major lesson is this: to become a successful trader, you must free yourself from fear and greed. Only then will you trade with clarity, confidence, and true control. Point 6. Focus on the process, not the outcome. Most traders enter the market with one obsession: making money. They measure every single trade by whether it gave them profit or loss. But Mark Douglas explains that this mindset is dangerous, because it makes you emotional, impatient, and outcome-dependent. The reality is simple: you cannot control the outcome of any single trade. The market is bigger than you, and it will do what it wants. What you can control is your process, your strategy, your rules, your risk management, and your discipline. Think of a professional athlete. A runner does not control the weather or the track conditions, but they do control their training, their diet, and their preparation. In the same way, a trader must shift focus from results to execution. When you judge yourself only by outcomes, a winning trade can make you overconfident, while a losing trade can crush your spirit. But when you judge yourself by your process, you remain stable. You know that if you follow your edge with discipline, profits will come naturally over the long run. Douglas reminds us, your job is not to make money on every trade, Your job is to execute your plan flawlessly. If you do that, the money will follow automatically. So the sixth key lesson is this: stop chasing profits, start mastering your process. In trading, the process is the real victory. The profits are just the reward. Point 7. The trader's edge. Every successful trader has something that separates them from the crowd, an edge. Mark Douglas defines an edge as nothing magical, nothing guaranteed, but simply a strategy, method, or approach that has a positive expectancy over a large number of trades. In simple words, an edge is what gives you better odds of winning than losing, not in one trade, but across many trades. The mistake most traders make is believing that an edge will work every single time. But Douglas reminds us, an edge does not mean certainty, it means probability. Even with the best edge, you will still face losses. The difference is that over time, your edge will generate consistent profits if you apply it with discipline and patience. The real power of an edge lies not just in having it, but in trusting it. When you truly believe in your edge, you stop second-guessing yourself. You stop chasing random signals. You stop getting shaken by short-term results. Instead, you focus on executing your plan again and again, with full confidence. So the seventh and final key lesson is this: find your edge, trust it, and trade it consistently. That is the path to long-term success. Thank you for listening to this summary on Finance Audiobook Summary, the real platform to learn finance and trading wisdom in the most practical way. If you found this valuable, don't forget to like this video, share it with fellow traders, and comment your thoughts below. And of course, subscribe to our channel for more powerful summaries that can transform your financial journey. Until next time, trade with discipline, stay consistent, and always remember, your mindset is your greatest weapon in the markets.